If you are a property investor and are looking for a place to invest in regional Queensland and you have a budget of up to $650,000 or less, then I think this video is for you. We're going to jump in and analyze the top 5 suburbs in Mackay that have the highest online search interest rates. I always say where intention goes, intention follows. So we're going to look at the suburbs that have the highest online search interest rates, which can potentially translate into ongoing house price growth in 2025. So these 5 suburbs could be a potential suitor for you to park your money in this year. So if you are an investor, I believe this video is for you, and it's going to give you the insight you need to help you navigate where you should potentially invest this year. Hello family, my name is Troy Bassini, owner and head of research of Life Buyers Agency. Now Life Buyers Agency, we operate on the ground in regional Queensland under these 2 specific brands here. So we've got the Capricorn Life Buyers Agency brand servicing central Queensland with a specific focus on Mackay, Rockhampton, Gladstone and Bundaberg. And then we've got Tropical Life Buyers Agency with a specific focus on North Queensland with Cairns, Townsville and Port Douglas. Now, we work specifically on the ground and we work with a lot of investors and home buyers in navigating this market, and we generally provide them access to pre and off market opportunities. We're generally helping them mitigate their risk and maximizing their upside, and then getting the better returns all round when trying to buy in these areas. So if you are an investor and you feel as though you're potentially might be in need of some help to get you into the marketplace, to help you navigate the better suburbs, to get you some pre and off market opportunities, to buy under market value, to buy a better performing asset, then feel free to reach out to me and the team. More than happy to have a chat to see if we might be able to add value to your investment journey. You can give us a call on that number there, or visit us on those 2 nominated websites and make an appointment with one of my team members or even myself. I hope to potentially speak to you soon, and good luck with your journey. So one of the things I believe as a buyer's agent is that intention follows attention. So where buyers' attentions are on particular properties, on particular suburbs, intention follows, right? So people that are looking at certain areas in high volumes, that means that that's where the demand is going, and then intention follows. They start to buy and transact in this marketplace. And obviously when you find suburbs where there is more demand than supply, that causes ongoing capital growth or price appreciation. And what we're able to do is look at certain data metrics and extract that data and benchmark that data to establish where eyeballs are going. And we've got access to realestate.com and Domain, and they've managed to give us the insight we need to figure out where the eyeballs are going in the marketplace. So the way we've benchmarked these top 5 suburbs is the search rates per property on realestate.com or Domain. And starting off at number 5 is a suburb called Beaconsfield. So Beaconsfield, for those who aren't familiar with the Mackay landscape, is a suburb located on the inner north. You're likely looking at about 10-minute commute into the CBD and roughly, I would say, a 20-minute drive to the beaches on the Mackay North. Beaconsfield, predominantly made up of, I would say, middle-aged professionals, as well as a sort of a section of blue-collar families as well, and a pretty good suburb that's performed well over the last couple of years, and we've certainly snapped up a lot of deals over here in recent years, and are still buying the opportunities, the right ones, that come up in this market as well. So we can see here that it's come in at number 5 for one of the suburbs being really strong when it comes to online search interest rates. So when a property is listed in Beaconsfield on realestate.com or Domain, it's getting high search rates. And we can see here that each property is getting roughly 914 unique views. And that is really, really strong demand, and it's above the Mackay average here. So look, I think a lot of that view per property in Beaconsfield is mainly coming from home buyers. I think a lot of home buyers are definitely drawn to this family-friendly neighborhood that's not too far from the CBD, not too far from the beaches, and clustered in around some really good public amenity there. So you get a really good cross-section of young families, young professionals, upper middle class demographic, all looking at potentially buying property in this suburb, as I think it'll appeal to a broad section of the marketplace. We can see here that it has a median house price of $614,000, and over the last 12 months, it's done 22.2% in growth. So a suburb that's certainly been on the rise. I believe that this median house price of $614,000 is still a very affordable suburb, given that a lot of upper middle class demographic are pushing in to this market. I believe that $614,000 by the end of this year could at least be $680,000, $690,000, and then the next sort of 3 to 5 years potentially push up to around that $770,000, $800,000 median, just because of that demographic flow into that area. They have the capacity to keep pushing this median house price up for sure. We can see here that rents are really strong in this suburb as well, roughly generating $650 per week per property, and over the last 12 months, that rent is continuing to grow as well at 8.3%. And look, even these median rents, I believe, have the capacity to keep moving into the 700s in the short term, and then push up well and truly above $800 a week over the next 3 years. As well, just given the demographic that are pushing to this area, I think have a lot of wiggle room with their household incomes to continue to force up rents as well. You can see here that from a suburb perspective, it's actually not a huge suburb. It's kind of around that sweet spot, around 3,000 dwellings there, 2,933 dwellings. And what you'll find is that it has a combination of new and older stock as well. Some of the older stock that is generally older than 30 years tend to be the stock that is priced under that median house price or around that median. What you'll actually find is a lot of the newer properties are selling for above that household median there of $614,000. Some of the newer stuff is probably selling up to 700 and above. So I think, like, if you have a budget of under $650,000, you're probably looking at stock that is generally 30 years or older. And if you want something newer, you might have to spend a little bit more than, I would say, $650,000. But if you can get something that's less than 20 years old, under $650,000, I think you'd be buying pretty well in this suburb. We can see here that stock levels are really low as well at 0.3%, roughly 17 listings right now. Demand looks very strong with most properties selling within 27 days of going on the market, and then the vacancy rate sitting at 0.4%. So vacancy rate's really low. Obviously, that's going to continue to drive those median rents up, and then stock levels really low, and this high demand in terms of days on market, I believe, will continue to drive that median house price forward as well. So Beaconsfield, guys, in Mackay, definitely a good suitor for one with a budget of under $650,000. But as I said, if you shop around and you can find a newer property there for under $650,000, I think you'll be doing well. But for the most part, most of the buying would be under $650,000, that, and those properties will be generally 30 years or older. If I was working with a $650,000 budget and I'm trying to buy right now in Beaconsfield, I would look at something like this. So this is a 3 bedroom, 1 bathroom, 2 car property on 808 square meters of land, 4 hydrangea court, Beaconsfield. Now, I mentioned before, you can buy like the older established properties that are 30 plus years old around that median house price now of $614,000 or less. And what you'll actually find is the newer stock tends to be a little bit higher, around that 650 or above. So I think this one, it says contact agent here, but I think it'll likely sell for around 590 to 610. And this is a 3 bedroom, 1 bathroom. And the reason why I like this one is that it is one of the older properties. So this is probably 30 plus years old, but it's a sturdy low set brick home. So these are very low maintenance properties. And even when they are in original condition, if they've been well maintained and well looked after, you could probably still get some good mileage out of the original property as well. So I like these ones because you come into the market in somewhere like Beaconsfield that's red hot right now, and you're basically paying $100,000 to $150,000 cheaper than a four-bedroom property. So that price variation between a four-bedder versus a three-bedder, I really like that because the rents don't necessarily increase that much for that extra bedroom. So you can probably rent this for about $650 per week, but a four-bedroom you might be looking at around $680 per week. So you get an extra $30 per week, but you have to pay an extra $150,000 more. So that's where I see really good value for these low set brick homes. But they also have the ability to renovate down the track. So you can manufacture some equity there. You can increase rents by redoing the bathrooms, redoing the kitchen, and then even reconfiguring the floor plan to add another bedroom, add another bathroom, and then turn these into a 422. And you've come in like still well and truly under what it would cost you to buy a 422 in this market. So yeah, if you can buy one of these guys, a low set brick home in Beaconsfield, I think they make for a solid investment. Coming in at number 4 on the list is a suburb called West Mackay. Now, West Mackay, where it's located, it's obviously in its name, but it's located on the inner west of the Mackay CBD, and you're looking at basically the best part of a 7 to 5 minute commute to the CBD itself from this suburb, and then roughly about a 20 to 30 minute commute to the Mackay northern beaches. So it's been a very popular suburb over the last 18 months, and certainly been getting a lot of eyeballs per property here. We can see going through the data now that it receives 1,290 unique views per property. Its median house price currently sits at $530,000. Over the last 12 months, it's done 14% growth. And then in terms of median rent, it sits at $580 per week, which is a very strong median. And the rents have grown 5.5% in the last 12 months. In terms of suburb size, it sits around that 3,100 unique dwellings. So it's just a bit bigger than average in terms of its size. When we look at some of the supply and demand side data, we can see that stock levels are really low, sitting at 0.3%, which equates to only 12 listings. And then days on market sit at 28 days. So demand looks very strong when you couple that with 1,200 unique views per property, and most of those properties selling only taking 28 days to sell, suggests that demand is high in this suburb and supply is really low, which is really good ingredients for ongoing capital growth. And then when you look at that vacancy rate currently sitting at 0.2, which is roughly around 6 listings, a very low vacancy environment as well. And that's obviously been able to put upward pressure on that median rent, and you can see why that's done 5.5% in the last 12 months. But equally, when you look at those low levels of stock as well, sitting at 0.3 and only 12 listings, you can see why the median house price has done 14% over the last 12 months. I do believe at $530,000, this median still has a lot of wiggle room to grow. And what you'll actually find in West Mackay is a lot of those homes are around that post-war construction. So they're generally older than 40 years. And we're seeing a wave now, a huge wave of gentrification move into this area. And I think a lot of people taking advantage of the West Mackay location being so close to the CBD, close to like some big job hubs in the area, like the public and private hospital, close to some really good public amenity along the Pioneer River. So that median has really accelerated over the last couple of years. But given that gentrification movement into the area, I do believe like that 530,000 could easily get to 630,000 in the next 12 to 18 months. So I believe it is a very opportunistic market for short-term growth. And if supply levels remain low, I can't see demand going away anytime soon, because a lot of people are seeing really good affordability and value for money in West Mackay, coming in, buying these older post-war homes, renovating them, adding value, and then staying in those properties and changing the suburb profile and landscape and demographic in the area. And that demographic shift is really making that area desirable for a lot of young professionals now, upper middle class demographic and owner occupier. So I can see that median certainly going up in the short and medium term. And then those rents, given that it's so close to the job hubs, so close to some high paid industry job hubs as well, like health, that's still a very affordable median rent, and I think that $580 could easily push up to $650 per week in the next couple of years as well. So West Mackay, great option. You just have to be prepared to, I think, buy an older home, and with an older home comes with a potential higher holding costs. But for the most part, if you can buy one of those, hold it, and then later renovate it, I think they make for really good investments. So Mackay getting some really strong viewership here for each property that goes onto the market, and certainly a suburb you should keep your eye on as a property investor. All right, so if I had a budget of 650 or less and I was looking to buy in West Mackay, I would buy something like this right now, which is on the market for offers over 569, likely to sell for high 500s, potentially low 600s, 41 Field Street, West Mackay. It's a 4 bedroom, 1 bathroom, 2 car property on 835 square meters. And that's what's really sold me on this property is that land size. So in and around West Mackay, you have that median density zoning, and if you can target one of these older blocks, you have the potential there to have a property that has development potential or value add potential because of the land zoning for that immediate area. So I probably like this. You'd be able to put a granny flat out the back, subdivide it, put a secondary dwelling. You'd be able to knock down the existing dwelling, put a set of townhouses on there, a duplex or a triplex. So West Mackay, if you can target those properties on bigger blocks, they just give you so much more value add potential, and a lot more when it comes to an exit strategy, because the property is just not a one trick pony. You can potentially do a few different things with it. You can cut and skin it multiple different ways. Now, these properties, as I said, they're a little bit older. So what comes with older properties is maintenance. But then if you can find one that's been recently renovated, you're probably looking at spending a little bit more. But I would say majority of these properties that are post-war only need cosmetic work. So probably $15,000 to $20,000, paints, carpets, uh, maybe chipping up some gyprock here and there, tidying the place up. Other than that, like, you're good to go. So if you can get your hands on one of these properties, guys, I think you'll do pretty well in West Mackay. All right, moving into the business end of the list now in the top three. So coming in at number three is a suburb called South Mackay. So it's in its name again, similar to West Mackay. So you have South Mackay just on the inner south fringe of the Mackay CBD, and you're looking at roughly again, similar to West Mackay, a 5 to 7 minute commute into the CBD and roughly half an hour to the Mackay northern beaches, and returning very similar numbers to its compatriot there in West Mackay. So currently getting 1,290 unique views per property, so slightly edging out West Mackay. We can see here that its median house price currently sits at $526,000. So they're on a very similar sort of price point, and you can see over the last 12 months, it's had a rocket injected into it, done 25.1%. Its median rent, currently sits at $550 per week, and that too has grown 5.8%. So a rental market on the move as well. In terms of dwellings, it's one of the bigger suburbs on the south corridor of Mackay. 3,400 unique dwellings. Looking at some of the other demand and supply side data around stock levels, sitting at 0.3%, which is a very low supply environment, and that equates to roughly around 10 listings right now. Things are selling very fast as well, around 35 days each property taking on average to sell, which means that roughly most properties are going under contract within the first 7 days of going to the market. So supply levels are low, demand looks to be high, and I think that's really played a role in that median house price doing what it's done over the last 12 months. And a lot of those buyers, I believe, have mainly been owner occupiers, because similar to West Mackay, South Mackay is also riddled with a lot of these older post-war homes on larger blocks, and given where it's located, it's also going through a big gentrification shift because of that affordability and where it's located. People are coming and spending $520,000, $550,000 buying these older homes and then sinking $100,000 to $150,000 into them, renovating them, and it's really reshaping this whole suburb, this big demographic push. And similar to West Mackay, they're all doing it because of that location. You're just so close to the CBD, so close to the Pioneer River and all the public amenity that comes with that, so close to a lot of the big job hubs. Like, it has a lot on offer, and it's still very affordable. Like, I believe that $526,000 median can easily push up to 650 in the next 12 to 18 months, and home buyers just are loving that affordability, coming and buying these older homes. And I think there's a lot of investor activity as well that are capitalizing on those juicy rental yields in this market as well. So I believe that median rent even has the ability to push up to around that $620 to $650 per week in the next sort of 1 to 3 years as well. So plenty of wiggle room in that median, I believe, to keep growing when it comes to the house price. Plenty of wiggle room in that median rental figure there as well. And providing that stock levels stay low and demand remains strong, which I think it will due to affordability and low levels of supply, then we were likely to still see ongoing growth here in this market for sure. But definitely a really good opportunity for someone with a budget of under $600,000, want to take a bit of a punt on some of these older properties, looking at a value add strategy where you want to renovate and add value, and even potentially on those older, larger blocks as well, look at a granny flat or subdivision type strategy as well, because in and around South Mackay, those properties offer similar opportunities or similar scope to what I mentioned before when it comes to West Mackay. So if I was trying to get into the South Mackay market, I would be looking at something like this, guys. Currently on the market for offers over 549, likely to sell for very close to $600,000. It's a nice 3 bedroom, 1 bathroom, 4 car property on 822 square meters, and similar to the opportunity I looked at in West Mackay, those land uh, those land sizes in and around South West Mackay, parts of North Mackay, East Mackay, they're all very generous. These properties sit on larger than average block sizes. They're about 200 to 220 square meters more than your typical 600 square meter newer property out in the suburbs in places like Ruleville, Beaconsfield, Black Beach, Andergrove, some of the newer parts of Beaconsfield, even in Glenalla as well as Oral East. So people are really looking at these opportunities in the centre of town and going, I can get way more bang for buck when it comes to land if I buy in and around South Mackay, West Mackay, East Mackay. And that's definitely what's happening here, and that's definitely what's put a rocket up that median house price over the last couple of years. But I would target something like this, guys. You have the ability to build out the downstairs area to create an more inhabitable floor area, which means you can charge more for rent. You have the ability to put a granny flat out the back. You have the ability to knock this on over, put a set of townhouses or duplex or a triplex on there. So yeah, these properties in the older part of Mackay definitely offer really good value for money and gives you so much wiggle room to do things when it comes to different investment strategies. But I'd be buying something like this, guys, if I was buying in South Mackay. All right, coming in at number 2 is a suburb called Andergrove. So Andergrove, located on the inner north of Mackay, you're probably looking at the best part of a 7 to 10 minute commute into the CBD and roughly around a 15 to 20 minute commute to the northern beaches. And as you can see here, doing some fantastic numbers when it comes to properties going online. They're well and truly above the Mackay average and been very popular. And over the last couple of years, it's been a really good market to park your money. And a lot of investors over the last couple of years have come into this suburb and certainly done really well. So if we move through the data here, we can see that for every property that goes online, it's getting roughly around 1,600 unique views. So really, really outperforming those other suburbs we just touched on before. And that demand looks to be really, really strong there. And look, I think Andergrove, because of where it's located, sort of not too far from the CBD, and you kind of wedge between the CBD and the beaches, it just offers so many good options when it comes to the type of people that would rent there or wanted to buy there. Because if you work out in the northern beaches, if you work in the CBD, you're not sort of too far from either location. And then when you look at the Andergrove as sort of a residential precinct, and let's look at the suburb itself, it's very leafy green, has a lot of lovely quiet little streets, and really good little parklands as well. So it's very desirable and appealing to the owner occupier market, and I really believe that's what's driving that at the moment is a lot of owner occupiers pushing into this market at the moment. And we can see here that the median sits at $560,000 right now, and over the last 12 months, it's done 22.7% growth. So huge numbers there when it's come to how it's performed of late. Rents are really strong at $600 per week right now, and over the last 12 months, it's done 11.1. So a rental market that's done double-digit growth is really good because you don't really see too many that do double-digit growth per annum in regional Queensland. So it's certainly a rental market on the rise there. In terms of its size, you can see it's a lot bigger than the other suburbs we touched on today. So it's one of the biggest suburbs in Mackay for that matter. And touching on some of the demand and supply side data around stock levels, you can see stock levels are very tight, 0.8% with only 22 listings currently, and then most things are taking on average 28 days to sell on market. So supply levels are low, and then demand in terms of days on market, when you couple that with these high unique views per property, you can see that demand is strong, supply is low, and that's definitely contributed to that median house price doing strong double-digit growth over the last 12 months. That imbalance has certainly put a rocket up this suburb, and then the vacancy rate sitting at 0.3%, only 13 listings currently right now for sale. So those low vacancies as well are also attributed to that median house price doing double-digit growth over the last 12 months. So the data for Andergrove looks so good all round as an investment proponent right now at this point in time data. I'm really, really happy with it. But in terms of that median house price currently sitting at 560,000, I think that's a median with plenty of wiggle room in it to grow as well in the short term. I reckon that could easily get to 660,000, so another 100,000 in the next sort of 12 to 18 months for sure. Because similar to some of those other suburbs I mentioned, I'll probably say similar to Beaconsfield, actually, not the other suburbs, where a lot of the other suburbs are more or less going through gentrification, whereas I see suburbs like Beaconsfield and Andergrove, a lot of upper middle class demographics sort of pushing into this suburb to sort of capitalise on sort of the next affordable property, sort of between that 6 to 800. A lot of upper middle class families are going in and targeting those opportunities, and that's that price bracket where there is a lot of transaction volume right now. And if you want to play around in Andergrove and invest in Andergrove, and you want to look at buying around that median of 560, you're probably looking at a 3 bedroom, 1 bathroom property there as opposed to a 4 bedder. So that's something you probably need to be mindful of. But in saying that, I believe anything with a 4 bedroom attached to it can certainly get to 660,000 over the next couple of years as well. Plenty of wiggle room there to grow, and those median rents, I think they can easily push up to around $650 per week by the end of this year as well, and continue its sort of really good run there of double-digit growth, and push close to 700 maybe in the next couple of years as well. So just that demographic makeup, I think, will underpin and keep driving this market forward. A lot of upper middle class demographic, as I said, pushing in there and really driving up that median rent and median household. So as I said before, majority of the buying around that current median house price for Andergrove will likely to be 3 bedroom properties as opposed to 4 bedroom properties. Majority of the 4 bedders now are usually selling above 650,000. But as I said, if you can find a 4 bedder under 650, definitely have a crack at it, because obviously they're the ones that have a little bit more owner occupier appeal and rental appeal to having that additional bedrooms. But nonetheless, some of these 3 bedroom properties that you can find in Andergrove, just like this one, can be fantastic investments here. So this one here, 11 Vicky Court, Andergrove, it's a 3 bedroom, 2 bathroom, 4 car on 671 square meters. An older home, but is a big 3 bedder. It's a weatherboard construction in really good condition. So I really like these big three bedders on a decent sized land parcel. They're not the brick construction, however, they do offer great value add potential through renovation down the track, and they scrub up really nice, providing you can still keep the existing character of the home. So yeah, these would rent really well, and I can see these three-bedroom older weatherboard properties definitely pushing up as well in the medium and short term. So yeah, if you can get your hands on one of these guys, definitely make a jump at it because they can be really good investments. Okay, coming in at number one in terms of the most popular suburb right now when it comes to online search interest rates in Mackay is a suburb called Imeo. So Imeo, a beautiful residential beachside suburb on the northern beaches of Mackay. You're probably looking at the best part of a 25-minute commute into the CBD and a few minutes stroll to the beach. So a very beautiful part of Mackay, and I can certainly see why it's taken out the top gong here. So if we move through the data, we can see here that for every property that goes on the market in IMEO is getting roughly 1,661 unique clicks per property. So a very high demand level there, and a lot of eyeballs definitely gravitating towards the listings that come online here. We can see here that it has a median house price of $595,000 over the last 12 months. It's done 13.4% growth. I'm actually quite surprised it hasn't done more than that, but nonetheless, that means that there's potential for it to catch up to some of the other ones that have been outperforming. But let's keep moving through it. So we can see here that median rent sits around $650 per week, and over the last 12 months, that's grown 8.3%. It's one of the smaller suburbs. It's in sort of a pocket of the northern beaches there where you can't really do too much in terms of future development because of flood zones and tidal overlays and things like that, mangroves. So it's fairly capped in terms of its dwelling levels and amount. So we can see here that 1,400 unique dwellings from a suburb perspective. Looking at some of the other supply and demand side data, stock levels very, very low at 0.3%, and just the point in time data right now around listings only sit at 6 listings. So supply very, very tight. Things are taking on average 32 days to sell, and the vacancy rate sit at 0.3%, which equates to 4 listings in total. So the rental market, very, very grim supply there. And on the sales side of the market, very grim supply also. So you can definitely see how both of those really low supply levels coupled with strong days on market and high online search interest rates have really pushed up the median rents and median house prices over the last 12 months. So just going back to this median house price now of $595,000, I really believe that there's so much value for money in IMEO when compared to like other markets like Dolphin Heads that are a little bit more upmarket right now. You can get into IMEO for under $100,000 to $150,000 cheaper for very similar property. I'd be just as close to the beach and enjoy the beachside lifestyle still. And then even IMEO in terms of like what it offers from a lifestyle perspective. When you compare it, let's say that median house price to the northern beaches of Cairns, which would be another sort of lifestyle market on the Queensland East Coast, you're looking at spending 800, 850, 900 to $1 million to live in that suburb in terms of its median house price. So I believe somewhere like Imeo has a lot of really good value for money when compared to other, I suppose, suburbs that are located along the Queensland East Coast in these big regional hubs. So I believe that 595,000 can easily get to 750,000 in the next 1 to 3 years because that demographic makeup really upper middle class, upper income bracket of the sort of household incomes in Mackay, all sort of clustering in and around Imeo. And with that low supply of dwellings there in total, right, you can see how that shortage or that scarcity just continues to create that sort of bubbling effect or that that imbalance between supply and demand to keep pushing up that median house price. So yeah, I see tremendous value in this in the short, medium, and long term, and it's very appealing to the upper middle class demographic, which I believe will keep driving this market forward, and also the people that want that beachside lifestyle will be willing to pay a premium to live in this area. I think going forward, and yeah, if you can get into this suburb and buy around that $600,000 median house price at this stage, oh man, you're going to be doing really well long term. Because if you look at across the board, even like the pocket makeup of IMEO, like there are some pockets in IMEO where houses sell for above $1 million, right? So there is a lot of really good price elasticity in this suburb, and that's what I really like about it from an investment perspective. Is when the upper end of the market keeps pushing up, and you own an investment on the lower end of the price spectrum, then you can really piggyback off the upper end of the market. So if if $1 million house goes to $1.5 million, your house at $600,000 could easily push up to 900 to $1 million, right? Just based on piggybacking off of their other quality stock in the immediate area. So I really believe this has heaps of potential, guys, to keep going up. And those median rents, like to live at the beach, you often have to pay a premium to enjoy that lifestyle factor that it offers, and what comes with that is that premium. So that $650 per week is probably the lower end of the market right now. Like I know properties that are renting for up to $750, $800 per week, even around that 630 purchase price. We looked at one just this week that we could have picked up for around 630,000, a 4-bedroom, 2-bathroom property on 600 square meters. That's going to be my example I'm going to show you guys next. But that had a rental appraisal of $750 per week, right, on a really nice street. So that median rent is sort of the lower end of the spectrum right now, but definitely has the ability to push up to around that $750, $800 median going forward, just because what that suburb offers in terms of lifestyle will continue to demand a premium there for sure, guys. But look, all the data here suggests that this is a suburb that I believe still has plenty of wiggle room in it. And if you actually look at it, what it's done over the last 12 months, it hasn't done the high double-digit growth, like around that 22, 23%, like some of the other suburbs we touched on. So that's a really good thing in terms of this suburb. It hasn't actually grown as much yet. It offers so much more, I believe, than all those others. So that means that there's a lot of wiggle room for this one to keep growing. And if you can get into this market sooner rather than later, I think you're going to really reap the benefits here. So I mentioned before that IMEO is a suburb where there are pockets within that suburb where houses sell up to $1 million or more. So it has a lot of price elasticity, but you can still get into the market and buy stuff like this for around that low $600,000. And that's where I think the really good buying is as an investor, because you can get in at that low purchase price, but still generate really strong rents. And this is a property that we were offered off market during the week, and we looked at it, put it in front of a client, and she said no. Like she said no, got cold feet, and unfortunately we didn't have another buyer to connect this opportunity up with. So we believe this was a fantastic deal that just slipped through our fingers. You can see here it's a 4-bedroom, 2-bathroom, 2-car property, 35 Hermitage Drive in Armio, a nice elevated part of the suburb, surrounded by premium homes, a beautiful part of Mackay for sure. And we could have picked this up for $630,000. So I believe, yeah, if you are buying in Mackay and you're interested in a suburb like Armio, try and target these low set brick homes that are still under that $650,000 price point, because majority of those would rent around that $750 per week. So when we looked at this one and got the rental appraisal, yeah, it came in at $750 per week, right? So crazy numbers, right? So yeah, this is what I would buy if I would be shopping around in IMEO. And yeah, again, if you can get in at 600 to 650, something like this in 10 years' time will virtually double, I believe, just given that location and that lifestyle factor being so close to the beach and being in such a beautiful part of Mackay. But yeah, guys, I believe this one's now under contract. It went under contract yesterday. So yeah, unfortunately, if you want to have a crack at that, that's now gone. But in saying that, guys, if you ever need help getting into the Mackay market and want to find deals like this that aren't even on the market, feel free to reach out to me and the team as well. We find deals like this every week.